Hello and welcome to another edition of It's About Money. I'm Nanette Nocon and thank you for joining us. If this is the first time you've tuned in, we're a program that aims to educate and help you with a number of financial topics. It's not our intention to replace your financial advisors, attorneys, or accountants. And I hope today that you'll be able to get some good information from the show. Home ownership has been an American dream for many, many years. And comes with home ownership is a mortgage for most people. So today we're going to talk about the maze of mortgages and what kinds of things are involved. Today we have two experts that will help us. First is Jeanette Brower. Jeanette is a mortgage consultant who has been in the business of mortgages and also real estate for 20 years. Yes. Thank you for being here. You're with Wells Fargo Home Mortgage.
Yes, thank you.
I appreciate you being here. And we also have Jamie Freders, who is branch manager for Wells Fargo Home Mortgage as well. Mm-hmm. Thank you for being here.
Thank you for having us.
And you've been in the business for 15 years as well,
15 years and counting, yes.
All right. Between the two of you, you've got a lot of expertise.
That's right.
My first question is, what are the most common types of mortgages these days, Jeanette?
I think traditionally people have thought that a 30-year fixed-rate mortgage is a one-size-fits-all type of product to get, but our job as mortgage consultants and mortgage specialists is really a lot like yours, where we need to uncover people's needs and really ask a lot of questions. How long they're going to be in the home, what their debt situation is, and then we can determine what's really best. So it's not a one-size-fits-all anymore. I mean, financing has become very creative.
That's great. It's just so many, the needs of people have become so varied.
Yes.
That it's wonderful that companies come up with creative ways to finance buying a mortgage.
It can literally save thousands of dollars. I mean, you really need to spend the time, a good 6 months to 1 year before you even think about buying a house to really, do your homework on it.
Sure, because without the success of the financial side of it, it's hard to find that home that's really right for you.
That's correct.
Otherwise, you end up with a disaster, possibly. So great. Now, besides buying a house, what are the uses for a mortgage these days? Why do people get a mortgage besides buying a house?
That's a great question. I mean, definitely there are so many other reasons why you would get a mortgage. Just than buying a house. I mean, the number one, I would say, second reason would be home improvement. And many people are opting, instead of making a move, to put an addition on, to possibly redo their kitchen. And the equity in your home is a great resource for that. And then, having said that, many people have already done that in the last few years, where we've experienced some, just record low short-term rates on home equities. So now those rates have moved up in the last year and a half. So it could possibly even be a great time for someone that has a home equity line of credit to take a look at consolidating that into a lower fixed rate first mortgage right now. So home improvement, most definitely, I would say debt consolidation, second home, investment property, which is, very popular. We've seen big appreciations, in Florida and states like that. So Wells Fargo, we're able to do mortgages in all 50 states. So, that's definitely another great idea for a second mortgage. And then also matrimonial, divorce, marriage. And then lastly, I would just say that something newer on the scene would be something more serving our elderly population and reverse mortgages. Mm-hmm. I don't know if you want to comment on that.
Well, the reverse mortgage is a mortgage. It's newer to this area. It's been talked about, but it's an opportunity for our aging population who are homeowners to use their equity and stay in their home and create actually a cash flow inbound instead of a mortgage payment outbound. The popularity has been growing with some of the downturns in the markets and so on. And we've found that through a little bit of education, these are becoming more popular and better options for our aging population.
Actually, it's great. In England, most of the people their homes are their pensions. Mm-hmm. So when they retire, they actually take the money out. So it's becoming
Similar
popular
concept.
Here.
It's great. And the misconception with the reverse mortgages is that the bank is taking the home, or I don't own my home anymore. Home ownership never changes. The homeowner is the homeowner. They're just utilizing their equity in a form of an annuity, as a lump sum, or candidly even a savings account they can tap into at a later date.
Sure. I think it's a great idea, because if you have elderly who have some payments that they need to make, let's say a car payment or even a mortgage, a small mortgage attached to that home, they could actually take that reverse mortgage, pay off those two pieces, and enhance their cash flow so they could take care of things as increased heating bills or medications and stuff like that. Great product.
And there's counseling that's required to go with that so that the homeowner is educated on the process prior to getting into the process. And here in Rochester, we do have a reverse specialist who will sit down and provide the counseling, and they can go into it in an educated way.
And that's a federally sponsored type of program, isn't it? The federal government is involved in that?
Yes, it is, actually. One of the ones that is most popular, the one that we subscribe to, would be the FHA-backed one.
Okay.
So it's a government-insured mortgage with set interest rates. It's just become a very popular option.
Yeah. That's great. So there are many different ways to use a mortgage these days. And one of the things you've mentioned, unfortunately in our area we don't see the kind of appreciation that happens in Florida or in Colorado or California. So when people think about buying a second home or investment property, using the equity from their home in town makes it easier to finance those kinds of purchases.
Exactly.
Yeah, that's wonderful. Now, how long do consumers tend to hold mortgages these days?
I would say the trend is still 5 to 7 years.
Okay. All right.
Yeah.
So people think about living in the same house forever, but then, or possibly just having different financial needs.
Right.
So the mortgage term might be shorter than actually living in that house.
That's right, which is another great reason why you want to look at not just a 30-year fix.
Yeah, lots of other opportunities. Now, what are some of the trends that you're seeing? You've talked about reverse mortgages. What are some of the trends that's happening these days with, mortgages and stuff?
I mean, I guess one thing that I would say is that you're seeing a more educated consumer, somebody that has researched it and done a little bit of homework. They're in a good position, with their jobs and with their incomes. They've worked on paying down their debt, but that may have left them with little savings or cash poor. So I think that's something that I'm seeing quite a bit, and hence we've also developed products where someone can go no money down or even up to 103% financing.
I see.
So I definitely am seeing a trend where people have paid down debt and they've secured their jobs, but the savings potential isn't quite there.
Sure. Okay. And there's so many programs where people can save a little bit more in their 401k, release some cash flow that normally goes to the mortgage, so then they can get the employer matching in their 401k by refinancing and so on. So there's a lot of things that can come along with that. It actually is a great financial planning tool, looking at various options for clients, because then releasing cash flow, having some lump sums of monies that can be used for particular goals and objectives. Are interest-only mortgages popular in our area? I mean, some areas that seem to be a big deal, to just help the cash flow. How is that being accepted in our community here?
I think there's still a viable option for certain people in certain situations, but again, it's something that you really want to look at. I mean, we don't have the appreciation that some of these other areas have. So, I mean, generally with an interest-only mortgage, that is what you're paying, is interest only.
Sure.
So, I think for some people, it's still a great option, but again, you really need to talk to a mortgage specialist such as myself and, really determine, is that the best option for you?
Yeah, it's a great point because, for speculative areas, particularly they say in California, there's such a demand for interest-only types of mortgages. But I think, like here in Rochester, in our community, it's more like whatever is appropriate in your situation rather than going with what's the latest, trend. So hopefully they're doing the same out there. What should consumers do to get the most suitable mortgage for themselves?
Again, number one thing I just have to say again is really doing your homework and taking the time to meet with a mortgage specialist. I can't stress enough that even 1 year or 6 months before you actually project that you'll make a move, sit down with somebody and talk about things. I've had more people come in, and I'm sure Jamie will agree with me on this, and they're so proud. They've paid down their debt, they've paid off all their credit cards, and closed their credit cards, and it may not have been the best thing that they should have done. It may have left them with limited savings that's going to limit what programs they have available. So really, just like you would meet with an attorney, for legal advice, or a financial advisor, for financial direction, you really should look at it as a mortgage person as just another specialist that you need to take advantage of that resource.
It's a good point. You brought up a good point because many times clients feel like they need to make a substantial down payment towards a home. and it told me, you're using your cash reserves. You can't just grab the drawer from the kitchen
Right.
and raise $100 from that,
Right.
So you've got to keep some cash.
Jeanette makes a great point. Mortgages are not one size fits all. I mean, every individual who comes to our office, who sits down with Jeanette, myself, or anyone on our team, everyone has a different profile, a different experience. Just like a doctor wouldn't describe the same treatment for everyone, or you may not, map out the same savings plan for everyone. Everyone's different, and really analyzing what your needs are today, 5 years and 10 years down the road, is really necessary before you get into a mortgage decision. Because your house is an investment, and your financing is an investment vehicle.
Sure. Right. You're right. I totally agree with you. And before falling in love with a particular house, really know if it's something that's suitable for your financial picture.
And it's funny because a lot of times people will come in after they've used all their liquid assets to pay off all the debt. Almost, it's great. Obviously, paying down debt is what we all want to encourage and do. But moving those type of assets around prior, it's just a little too early. You should sit down and really map out strategy out before you move those assets around.
Yeah, everything's timing.
Okay, that's great. It's great advice. Just rather than just thinking that you have everything covered, just make sure you consult with someone.
Don't assume.
Yeah.
Sit down and talk.
Excellent point. Now, how important is it to have the highest credit score?
That's a great question, and I think it's important, as far as your terms and your interest rate are going to be dictated by your credit score. Really, everything's gone to credit scoring. Your mortgage, what rate you will be at, a credit card, a car loan, but I mean, if you have a lower score, it doesn't mean that you can't get a mortgage. But credit scoring is almost like a report card, of how you are going to pay this future debt. So there's a great article in Money Magazine this month, which you have been featured in, and I would just say it's great recommended reading for anyone, and it talks about credit scores, and really we can only as far as the formula, you can't say exactly how they arrive at it, but being in the business for the amount of years that I have, I can tell you things that you can do to better your score. And the one thing I would recommend is obtaining a free copy of your credit report. The article, mentions that 25% of the people find errors. So get your credit report, know what your scores are. You do have to pay extra to get your scores. Pay your bills on time. Don't max out your credit cards. Live within your means. And then lastly, just as we were just talking about, really think before you either pay down or pay off a debt or open a new one, because those are all factors that will play into your credit score.
I see. Don't go shopping.
No major purchases. Right. But really, paying off a card, you might, we have people that come in and they're so proud they've paid everything off. Well, one of those things that they've closed might be a credit card they've had for 20 years, and that's really, one of the things that's going to better your score in your report, because it's giving that creditor, a longer history of how you've paid. So it really does pay to talk to somebody first.
If you're sitting down and considering a home purchase this spring, you can actually sit down with Jeanette, or one of the home mortgage consultants, and we will provide, let you view your credit report along with the credit scores as part of the home purchase process.
That's correct.
I see. Oh, that's
no charge.
Okay.
There's no charge for that service, so that Jeanette is experienced in sitting down and going through the credit history and how that will play in the mortgage selection process.
I see.
So it's an opportunity to go through that in a very comfortable setting.
So it's a great time to strategize, like you said. That's the time after, when sitting down with a mortgage specialist to see these are the things that you can do between now and the time.
Exactly.
And this is the time of year when people are doing their tax, refunds, and don't just automatically assume. Take that refund and pay off, a credit card. If you are thinking of a home purchase, I mean, really, again, what's the best use for that money?
Yeah, it's interesting you mentioned the credit score. I knew of somebody who was buying a house, and then right before the closing, went out to buy $20,000 worth of furniture and put in the credit, and it brought their credit rating so low that the rate changed right before closing. You really have to kind of pay attention to what you're doing.
Yeah.
You really need to follow the lead of your home mortgage consultant. We have the experience in how these things operate and how they're going to work, and we'll lead you through that process. And it's okay to have a debt structure when you're applying for a mortgage. Every mortgage allows for you to carry some debt.
Okay, so just being wise about that.
Yeah, and actually the scoring, I mean, you need to have some debt. They need to be able to see how you pay.
Sure, that's right. If you have no history, then the credit scores are not going to be there because there's no history whatsoever. Now, what about consumers who have poor credit rating? What do they do, Jamie? What kind of options are there?
Well, I think a lot of people stay on the sidelines and don't move into the home purchase arena because they're afraid of their credit score, or maybe there's been some issues in the past. You know, as an adult, and I can comment, and through my experiences, is that at some point in your life, a lot of adults go through some sort of financial setback, whether it be job-related, health-related, fraud-related. You know, our credit scoring is kind of a living thing. They can go down, but the good news is they can come up. The mortgage industry has recognized this, and there are different types of mortgages for all different levels of credit experience. I think the fear has kept a lot of people off, and maybe a little denial in wanting to look at their credit report. The best thing we can do is help you take a look at it, because whether you're even in the 500 category of credit scoring or in the 700, there are mortgage options available.
That's right.
I see. So don't look at the score and just make a decision based on that.
Absolutely not.
Just really look at what's out there and how
Absolutely
affordable
not.
it is, and that's great. That's great. Why are lending institutions willing to look at consumers when credit ratings are the best? You know, why?
Well, kind of what I indicated earlier. There are certain times and events in an adult's life, a person's life, where setbacks happen because of circumstances beyond their control, layoffs, medical histories, so on, where, you know, we couldn't make all the payments on time. We did the best we could. Possibly a bankruptcy occurred for any of the number of reasons. So these are things that don't indicate that this person would not be a good credit risk. It's just that it's with the lowering of the credit score, we may have to look at a type of mortgage like a Band-Aid mortgage, I like to call them. You know, very similar that if you were to cut your hand. I mean, one of the first things you would do is you put a Band-Aid on it, and then over a period of time it would heal, and the Band-Aid comes off. These types of mortgages exist very much in the same fashion. You know, we recognize and we see that there was an instance in the past that it caused some slow pays or a financial distress. We look at putting one of these Band-Aid type of mortgages in place. Our ideal is to take a look at a 2-year time period where there may be a small premium, but after that 12, 24 months of good, clean payment history, the Band-Aid comes off and we'll put them back into a different type of mortgage.
I see. Okay. So
But-
it's not a, all right. Okay. I see
But
what you mean.
you know, with the opportunities for the tax savings, you know, the personal gratification and the security of a new home, these people that are maybe if they experience some of these financial difficulties need to take a look at their credit history and see what options are out there.
Sure. Okay. All
Yeah,
right.
just don't just assume.
Right. Don't rule out that because such event took place that I can't own a house or something like that.
That's right.
And you know, very often the mortgage industry is also compensated. Letters of explanation also answer a lot of our questions.
I see.
And as a home mortgage consultant, you know, we've worked with many situations where the mortgage company just needs an explanation.
That's correct. Can I just interject that you might not even need a Band-Aid or a different rate type of mortgage. You could have a medical or some type of explanation where just with documentation and letters, you might be able to get the same rate that someone else gets. It's you know.
It just needs a letter of explanation.
That's right.
In the absence of any information, obviously they have to take a look at the credit score.
Sure. Okay.
But you know, if someone was in an accident, was out of work, and we've had individuals come in, bring in their doctor's reports.
I see.
You know, I mean, it's not cut and dry on your credit score alone. It's a starting point.
That's great information, because sometimes you tend to forget that the reasons are not useful information or tools to make
Right.
that decision.
The reason you have a low credit score may not be your fault.
Yeah, sure. Excellent.
And that's the kind of information that we need to really help bring out so that we can help place you in the appropriate product.
And help you improve it. You know, as I mentioned, I mean, there's things that you can do most definitely to improve it.
Right,
So,
right. Now, what about closing costs? I mean, how much money should people set aside for closing costs? Because that's usually, you know, people's mind. There's a down payment, and there's the
Right.
closing costs. You know?
You know, again, it depends on the state that you're buying in, but if you're speaking about New York State, I mean, you know, a rule of thumb, or generally you could say probably 2.5% to 2.75% of your loan amount. But the items that can vary are going to be New York State mortgage tax and title insurance. So I would say that's probably, you know,
That's
somewhere
pretty fair.
2.5%, 2.75%.
Okay.
Of the amount financed, I guess is the way it's
Of the amount financed, and that does not include your property taxes. A lot of times people will be surprised they get an estimate, and it's because it includes, you know, escrows, which are different from closing costs.
Sure, sure.
So it's
Okay.
another thing.
And the escrows, which would include the insurance, the homeowner's insurance, and also
Mhm.
property taxes,
Correct.
in some cases may or may not be escrowed. I mean,
That's right.
Yes,
You know, depending on the down payment, an individual could choose to pay those separately.
I see, I see. But those are all part of the formula in identifying eligibility for
Right.
the
Exactly.
size of the mortgage
Right.
and all that.
There's three major categories we look at when we're looking at the mortgage. Obviously, you know, your job history or income history, because what we're really looking to do is position a mortgage payment into your monthly cash flow. So, you know, the length of time you've been on at your job and what your monthly income is in relation to the new debt service. Credit history is a big player in the lending decision, and then well as savings ability. I mean, contrary to popular belief, we don't want to set mortgages up to fail. We want to make sure that, you know, that the home purchase, the home refinance decision is going to actually fit into the monthly cash flow
Sure.
and not
sure.
create a detrimental situation.
Sure, sure.
So we look at all three of those factors. If an individual is strong in one or two of them and weak in one, there are mortgages there that can compensate in those areas.
Okay.
You
I
know,
see.
it's when you come in, maybe you have difficulties in all three of those categories where the lending decision becomes challenged.
I see. Okay. So just, again, don't rule out because there's so many different...
Don't assume that you're not eligible until
Right.
you've actually
Yeah.
sat down.
Right, right.
Absolutely.
Okay. Yeah. And what type of mortgages are you seeing in amounts here? Probably varied all over the place, but I mean, in terms of home values in Rochester, it depends on the community that one lives in, but you've probably seen mortgages $200,000, $300,000, $400,000, $1 million, depending on the
Yep,
home that
some
they're
over $1
buying.
million, and then some as small as, you know, 20 or 30,000. It just all depends on, you know, the individual, but
Sure.
we cover them all.
Yeah, once again, it's individual. I guess part of it would make it easier if it was just one off-the-shelf type of situation. But I think one of the things that's always attracted me to the industry, and I think Jeanette, is that every day's a different day. Everyone's a different individual. It's problem solving,
Sure,
and it gives us a great opportunity to sit down and actually, you know, find out what's important to this individual and how this is going to fit in. What's the biggest priority? A lot of people, especially first-time home buyers, will come in and, you know, through the Thanksgiving table or talking with relatives, I got to put as much down as possible, you know, and they want to deplete all their cash reserves. Well, you know, you were a first-time home buyer. At one time you were.
Sure.
My standard question is, do you own a lawnmower?
Right.
I'm like, well, no, I
About a
didn't think about
couch.
that. You know,
Right.
did the house come with drapes?
Yeah, right.
No, and I said, well, these are things you need to think about.
Exactly.
Maybe we need to take a look at maybe putting 10% down.
Sure.
And instead of running your credit card debt, buying the lawnmower, the rake, or the new sofa,
Right.
let's use some of those assets and not increase your debt structure through the use of non-tax deductible credit card interests, but utilize the mortgage more as a tool.
Right. Now, with a 10% down payment, most of the time you'll end up with PMI, private mortgage insurance. And to some people, that's kind of like, oh, one more payment I have to make. What's the mystery with private mortgage insurance? What's the...
Well, you know, I guess I would, you know, if I could just interject, I would say a couple of things. I mean, the market has changed, and of course, we have many creative options where you don't have to pay mortgage insurance, even with no money down. I mean, you can do an 80-20, which is, you know, 100% financing, but in the past, you know, the home equity rates have been low. So, you know, now mortgage insurance really, it's not appearing so bad. I mean, you really need to look at what the current data is and, you know, net what your payment is going to be.
Sure.
So don't always look at it as a bad thing.
Right.
Yeah.
PMI is not a bad word. It's, you know, if you take a look at someone who purchased a home about 1.5 years ago and they elected to do a first and second mortgage to avoid the PMI, if they have not made any additional principal payments on the interest-only portion of the second mortgage, in today's dollars, that PMI option may have been better for them 1.5 years ago.
Yeah.
Because it could have been a fixed
Yeah.
payment. Yes.
Right. So I think you need to take a look at the individual situations and say, is it going to be better for me? If you're doing an interest-only second, you know, the initial payment looks very attractive, but you have to keep in mind, in an interest-only situation, there's no principal reduction. In Rochester, New York, our home appreciation rate's 3-4% per year. So you need to have principal reduction, especially if you're thinking of selling that house and moving up over the next 5 to 7 years.
Sure, to make up the difference. Yeah, that's
So you need to leave PMI as an option.
sure.
And we
okay.
need to revisit FHA in this community as well. Recently, FHA just raised their max mortgage limit up over $200,000. So someone could buy a home for $180,000, put 2.25% down
Oh,
and have
okay.
a very low insurance cost.
I see. Okay.
So you need to consider the whole spectrum.
I see. Okay. And actually, in terms of PMI payments, aren't there some regulations also that when you've paid down your mortgage to a level where you have 20% equity, that the PMI may be removed at a certain time?
There are, and then you just made me think of something else that you can do, financed MI, where you can have it, tax deductible. You
Oh,
can
I
put it
see.
right into your rate.
Oh, I
So
see.
again, there's so many innovative and creative ways. I mean, the whole market is definitely not the same as it was even 5 years ago.
Sure. I didn't even realize that
Yes,
there's
you
a
can.
creative way to finance that.
There is, so that
Oh,
you can have a
okay.
tax deduction. And I think it's definitely right now a better way to go than a variable rate home equity.
Sure, in anticipation of
So-
higher interest rates down the road. Wow, it's amazing. It's really amazing. There's a lot of different things that can happen. Anything else that you think that consumers need to take a look at? I mean, you said do your homework, so we collect all your financial data together, at least to get some organization there, right? Yeah. Anything else that you would like to suggest to our viewers that might be useful?
I think if you're in this time of year, if you're looking at the spring market, either to sell your house and move into a new one, or actually look at your first home purchase, preparation is everything. And I guess that's the best way I could put it. Sitting down and really having, if there's a spouse involved, deciding on what you want, what your financial goals is, what your comfort level with payments are. But not only sitting down, very much like if you were sitting down designing an investment strategy, not only what's important to the individual today, but what's going to be important to them 5 and 10 years down the road. Is there a family planning aspect?
Sure.
Going to go into this. Having a professional, a home mortgage consultant as a professional is a must. Having a realtor as a professional is a must. I've purchased homes with realtors, and I tried selling one without a realtor. I won't do it again.
Yeah. No, you mean, yeah.
There are certain professionals that you need to have in this process, but most definitely, prior preparation is everything.
Right.
Yeah.
It'll save you a lot of money in the long run, to be
Absolutely.
prepared and using the services of consultants. That's
Yeah.
without a doubt.
Definitely, and I would just add to that now it's really just a given that you're going to have a pre-approval letter when you write a purchase offer. So if we're talking about the purchase market, which we are into spring, I mean, it is expected that you will have a pre-qualification letter when you submit your offer, which are no charge. And I mean, even better, you can obtain an actual mortgage commitment where you are actually, you have a full-blown commitment just subject to finding a property. And as you get into a more competitive market, and things pick up, many times you find that you're not the only person looking at a property, and you could get in a situation where you have several people putting an offer in at the same time. So again, you want to position yourselves where you're going to just have, the most favorable, terms now, not only on your mortgage, and be a little prepared ahead of time, but also with your purchase offer.
Sure.
Be approved.
Oh, that's
Definitely,
great.
it's a must.
You want to be as competitive as possible and get that home that you'd like. Well, time has just gone by so quickly here. I really appreciate the information you've shared.
great.
Jeanette Brower, home mortgage consultant at Wells Fargo, and Jamie Frederis, who's branch manager at Wells Fargo Home Mortgage. Thank you very much for being here with your experience combined of 35 years. That's fantastic. And thank you, our audience, for joining us today. If you have any questions or concerns, please email me at nnocon@aol.com. Until next time, thank you for joining us.